It's Tuesday. It's 2 days before my birthday. I'm going to be 50 in 2 days, and I can't remember the dates. That's how out of it I am. I'm just messing with you guys. It's too early. It's only 7:55 in the morning. I think anytime before 8 o'clock a.m., I get a chance to joke around a little bit, right? It's only fair, right? All right, let's talk about the markets today. We've got durable goods. We've got consumer confidence coming out. Consumer confidence and durable goods are going to give us a good idea of how economy is going. Consensus, 100 to 103. Shot higher in September to a far higher than expected 101.8. And I'm looking for the number to continue. I'm hoping that the number has not been derailed by the COVID-19. Anything above 102 is good, really, really solid. Let's see how it happens. The consensus is 102. I'm looking for the number to be better than 102. Now, we also have durable goods. That's coming out in about half an hour. Let's see what the expectations are. Ooh, look at this. We're all over the place. Recovery in durable good orders is expected to hold 0.4, but look at this consensus, negative half to 2.6. Anything above 0.4 is solid. So again, I think we're going to hit 0.7, 0.6, but again, what do I know? We'll see in a little bit. But durable goods is going to be very solid, and consumer confidence. Consumer confidence is a really strong report ahead of the GDP, which is the biggest report of the week. Now, I know we've got earnings. I know we've got elections. Don't expect a crazy, crazy volatile market. Don't expect a lot of upside, downside, especially in light of the fact that we've got jobless claims, GDP on Thursday, which means usually, typically, not always, usually, a few days before the GDP, the market gets a little subdued in anticipation of the GDP. And in this case, as you'll see right now, the numbers have been all over the place. I mean, look at this. From 20% to 36% growth, consensus is 30%, and we were negative 31%. So, I mean, we're flying blind right now. Earnings, a little better than expected, but keep in mind, the expectations have been beaten down lower. So far, about 150, 200 stocks are out in the S&P. We're looking at a year-over-year negative 18.5% on negative 2.5% revenue. If the number goes down in about a week and a half, 2 weeks from now, to about 14%, 16%, anything above that negative 19 point something or 18 point something, it'll be positive. But again, the numbers have been revised lower substantially. Now, let's talk about the global market. Shares skidded in Europe and Asia after surging COVID-19 cases and waning hopes of U.S. economic stimulus gave Wall Street its worst day in months. Really, it's been bad. But I think today's going to be a little better day. We saw Takeover and a few other stocks. I'll talk about this Takeover, AMD buying Xilinx, but let's first talk about global markets. Stocks benchmarks fell all over the world. Paris, London, Hong Kong, Sydney, Tokyo was flat. Shanghai's recovering a little bit. Overnight, the S&P fell 1.9%, deepening its loss. Stocks of companies worst hit by the pandemic logged some of the biggest losses. Folks, I told you 6 months ago, I told you 3 months ago, and I told you 2 months ago, don't try to be a bottom picker because a lot of these stocks are going to go down for the second count. The second shoe hasn't dropped yet. And we are going to have a stay-at-home economy because COVID-19 is going to rise this winter. There's just no two ways about it. Stocks of companies worst hit by the pandemic lodged some of the biggest losers: cruise ships, airlines, energy stocks with crude oil. Crude oil is like $38 a barrel now. It's not really good. In another sign of caution, Treasury yield pulled back after touching their highest level since June. Unease over possibility that economic disruptions from a resurgence of COVID-19 outbreaks has added to uncertainties with the U.S. presidential vote just 1 week away. Don't tell me about it. I was in a happy mood till I seen the name Pelosi here. Doubts are mounting that Washington will come through with more stimulus for the economy before the November 3rd election. I wouldn't rule anything out at this point. That could be a big, big ploy by the Republicans, but again, it's not all up to them at this point. Let's see here. Days after House Speaker Nancy Pelosi and Treasury Secretary Steve Mnuchin failed to reach an agreement to send cash to most Americans. Again, we're not over yet. We still have 6 days to go. There are only 8 days left. 8 days? I thought it was 6 days. Let's see, 27th. Yeah, 8 days. Yeah, 8 days left for the U.S. presidential election, and there are still no signs of a stimulus. COVID-19 is surging in parts of the United States and Europe, raising concerns about more damage to still weakened economy. And that's really why the market is cooling off right now. South Korea reported better than expected numbers. That's good if we could trust those numbers. U.S. economy has recovered a bit since stay-at-home restrictions that swept the country earlier this year eased, but folks, it's not enough. We don't have a vaccine, and we're entering the same type of economic environment. Economists expect a report on Thursday, the GDP, to show it grew at an annual rate of 30%. Not sure about that during the summer quarter, after shrinking 31% during the second quarter. I think this may be a little too optimistic, but momentum has slowed after a round of supplemental unemployment benefits and other stimulus expired. And crude oil, let me show you this, $38. U.S. frackers pay like $41. So they're losing money. They can't even buy it at this rate right now. And folks, I'm going to tell you something else. I know Trump is making a big deal about Biden putting frackers out of business and putting oil companies out of business. That's a bunch of bullshit. I'm going to tell you why. And I'm voting for Trump, but I'm going to tell you why. 56% of Americans are now using non-traditional energy, and that number is growing tremendously. And it has nothing to do with Trump or Biden. It has to do with progress in technology, and it's not going away anywhere. And that's just the truth. It's not a political bias. It's just the hardcore truth. If you don't believe me, look at the numbers of some of these renewable energy companies. A lot of Florida is moving into renewable energy. It's called the future. It has nothing to do with our presidential election. And I know that Biden is he's just telling you that there's going to be a transition, which is happening, and it doesn't matter who's going to be president. That transition is going to be happening. And once again, I'm not here to be your friend, to be your enemy. I'm just here to tell you the truth, okay? Regardless of who you like. And again, I'm a Republican. I'm a conservative Republican, and I'm voting for Trump. But this thing about putting oil industry out of business, it's a big nonsense. 56% of this country is now using non-renewable energy. And that number is growing faster than you can imagine. All right? So again, it has nothing to do with the presidential election. This week is a busy week for earnings, with more than a third of the companies in the S&P coming out. We got Amazon, Apple, Ford, General Electric, and Google Alphabet on the docket. Across the S&P, profit reports from the summer have been mostly better than Wall Street has feared, though they're still on pace to be more than 16% lower than a year ago. Keep your eye on that number. I think it's 18.5, actually. And again, we're faring better. We're not. We're only faring better because the estimates have been beaten down. Again, my job here is to be honest with you. We've had 6 months of estimates being lowered and lowered and lowered and lowered, and that's why a huge percentage of these companies are beating estimates, because the estimates have been beaten to death. As soon as the estimates start rising, we're not going to be able to beat as many. For now, and I don't want to go too deep into earnings till we're done with this week, when we'll have a good amount, at least let's see, a third, probably about a half of the companies in the S&P out. But again, I wouldn't put too much weight into the expectations versus the actual number, because the expectations have been beaten to death. Now, a little surprise for you. AMD bought Xilinx. Now, Xilinx is up about, what, 12 points? Let's see here. 12%. $14, about 12%. And AMD is down about 1.43%, which is insubstantial. I like both of these stocks, and I think this is going to be one more factor that's going to drive Intel lower. Intel, yeah, it's not really doing anything. AMD and Xilinx have the potential to become bigger than Intel, and I think that's what the purpose of this is. So again, I'm bearish on Intel, I'm very bullish on AMD, and I'm pretty bullish on Xilinx as well. And now I'm bullish on both. But this is pretty interesting in light of what's happening right now. Typically, you don't see takeover deals during these segments of the economy when things are... But AMD has been right on top of everything. They've been doing a really, really good job, and I like the stock. Actually, let me look at the stock longer term. AMD, believe it or not, is one of the fastest growing stocks in history. Let me show you something. Look at this. Look at that. Look at that. It's doing something right now. It was a second tier company, chip company. They overheated, they weren't fast. But now a lot of guys in my office are moving to AMD from Intel. And this rally is, I mean, look at this thing. That's a rally, all right? That's a rally. That's a stock that went up about 30, not 100 times, but about 30 times in the last couple of years. So again, you got to watch it carefully. We're talking about a stock that was at 190 that's now near 94. So that's a 50 times, 50, 60 times gross. Again, that's a huge growth. Another stock is Domino's. Let me just show you real quick before I get into the meat of this. Look at that. 100 baggers, folks. 100 baggers. That's what I like. I like 100 baggers because they always will help you get on the right side of the market. Now, Russell 2000 still has an ascending triangle. I'm hoping we'll go higher today and stay here because the SPY is now cooling off. The SPY is up 0.45. Let me just show you here. Yeah, we're kind of breaking lower. Hopefully it's just a little breaking the stops and we're going to go back into the triangle. If not, we're going to go lower. This is a warning sign. Hopefully it's not a break, but we do have earnings and GDP and elections, so expect volatility. You should only have about 15 to 20% of your exposure in your account right now. If not, you should have ETFs. If not, you should have shorts. This is not a time to be a hero. Now, I want to give you 3 of my favorite pullbacks right now, and I really like these stocks. First one, Costco. Costco, ticker symbol COST. Profile, what kind of stock is it? It's consumer staples. Consumer staples is very defensive, and right now you want to be defensive. I like this pullback. I would probably be buying right around the 374 area, and I would put a liquidation stop at 365. Definitely want to wait for it to break the high of yesterday before you buy. And again, I would put a stop loss right here, and if it breaks the 50-day, you don't want this stock. Next one, GGG, Graco stock. What did they do? General industrial stock. Hello, industrial, defensive. Industrial stocks should go up no matter who wins the election. Again, wait for it to trade above the high right here. About 64.20, 64.30 entry with a stop loss right around the 62.50-ish level. It's a good stock, just made highs. And how about XPO Logistics? What do I tell you guys about logistics stocks? Logistics stocks are going crazy. Look at 5-year return. Look at the 5-year revenue, 606%. Logistics, transports, and logistics, defensive. And if we have a stay-at-home environment, these logistics stocks are going to go through the roof. Why? Think about Amazon. When somebody orders something, they rely on these logistic companies to get it to you. When someone uses freight shippers at big stores, they use these companies to get this to you. And remember, with the stay-at-home environment, these logistic companies are going to go higher. In this case, I would wait for a buy stop right around the 94, 95. Each of these, you want to see it break higher. If it doesn't take out the buy stop, the swing high of yesterday, you don't want it. And a sell stop right here around the 91.50 level. Again, entry 95, stop loss around the 91.50 level. Costco, Graco, and XPO Logistics. Now, if you guys like these stocks, I've got something big for you. For the first time in history, a brand new nationwide initiative is going live. This is exciting, folks. A world-renowned trader, hedge fund manager, and best-selling author is going to show regular folks how to potentially collect $10,400 in extra income every month for life. Not for a week, not for a month, not for a year, for life. It's called America's Income Project, and I love this. I mean, I am in love with this. Here's your chance to become one of the luckiest traders and investors to join this special project. Folks, you don't want to miss. You got a world-renowned trader, hedge fund manager, and a best-selling author presenting this. It's brand new. It's going live. Collect $10,400 extra income every month for life. Click the link below to reserve your spot. Get additional details on this revolutionary world premiere. Folks, you can't afford to miss this. It's a brand new nationwide initiative that you cannot afford to miss. Follow the link below. Learn all the details now.